Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's video, we've got an action-packed hour for you. We're going to be joined by the CEO of RIOT Platforms, Jason Les, along with Anthony Power to talk about their recently announced earnings, their hosting business, their outlook for 2024, and their growth or strategy moving into this year's halving event. Now, before we get into all that, please take a second, hit the like button, you guys. It's a huge help to myself, Anthony, and the channel. It's 100% free to do, and it helps get this content to other people who may find value. If you're not already subscribed, McNallie Money, feel free to join. Make sure you guys also hit the bell notifications or the bell icon to get those real-time updates as we release content. And finally, let me know in the comment section below if you're currently holding shares of RIOT, how you think they stack up to some of the other heavy-hitting miners like Marathon and CleanSpark, and your outlook for 2024. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, you get a 2-for-1. You've got our resident analyst, Anthony Power. You've also got one of the top Bitcoin mining CEOs in the world right now, Jason Les. You've been on the program a number of times. RIOT Platforms, obviously one of the heavy hitters in this space, just came out with earnings, but we've got so much more to talk about as we were just alluding to before we started filming there. So Jason, welcome back and thanks so much for being here.
Thanks for having me, Bryce. Anthony, looking forward to talking about what's going on today.
Yeah, there's no shortage of news. We just did another podcast. We've got all-time highs coming online with Bitcoin. We've got expansion. We've got February results. We've got earnings. Jason, there's no shortage of action in the Bitcoin space. But let's start off with some of the highlights from your recently announced earnings. Why don't we?
Sure. Another transformational for RIOT in 2023. A lot that was accomplished. First, we had a record revenue of $281 million. With our low cost of production, we had a direct cost of production net of our power strategy of $7,500 per Bitcoin for 2023. It's one of the best in the industry. We think that's really important. That's the advantage that we demonstrate to the market over, for let's just say buying an ETF. And it's, super critical to going into the halving. That efficiency also supported us achieving a record in $214 million in adjusted EBITDA. Also supporting that, of course, is the new FASB accounting guidance, where we're now able to mark to market. We adopted that for 2023. So glad that we're holding, at least at year end, 7,300 Bitcoin on our balance sheet. We're a Bitcoin company. So, now we appreciate the benefits from, as they say, eating our own dog food. Like, this is a part of our balance sheet strategy, holding Bitcoin on our balance sheet. I think the other thing that's really important to highlight is the strong liquidity position that RIOT exited 2023 with. $600 million in cash, and at today's prices, $450 million in Bitcoin. That's over $1 billion in net liquidity with no real, only very nominal debt from our subsidiaries credit facility, but otherwise no real long-term debt. So as the industry takes off and expansion is important, we're very well positioned to do that, particularly with our Corsicana facility, which I know we're going to talk a lot about in the podcast today, but we're set up for significant expansion there as a result of our balance sheet strength, which will take us to, at that facility alone, 1 gigawatt of capacity when fully completed. So a lot of the groundwork laid in 2023, and 2024 is going to be an exciting one for RIOT.
Yeah, groundwork is laid literally and figuratively, and we are going to get into the Corsicana, of course, some of that expansion. Now, we obviously monitor Twitter or X pretty closely here, Jason. Since earnings came out, we've had a number of comments and questions. One that was kind of recurring was in relation to your production efficiency. And I know this has been on your radar as well. You started to kind of address it in some of the press conferences. Can you talk to us about production efficiency and what the strategy is there from RIOT's perspective?
Yeah, that's something that we're really focused on addressing and improving. And I know there's, I'm sure we'll talk about the power strategy later as well. I've seen commentary, some people think that it's a result of the power strategy that impacts production. That's very true during the summer months. But, we're not forced to make bad decisions around curtailing or not with that strategy, but we could talk about that later. As far as production efficiency goes, our efficiency is being measured by the 12.5 exahash capacity figure that we highlight. that reflects all of the miners that we have and are deployed. So that is the standard that we're looking to be held to. So when people see that, we're not producing Bitcoin relative to that figure, it is, totally right that we are held accountable to that figure. Now, we don't have excess inventory. We don't have more miners deployed, targeting 12 and a half. We're not swapping in and out necessarily. Not to say that there's anything wrong with that. I'm just saying the way that we present our figures, 12.4 is there, what's on the ground, and that's what we're trying to that's what we're trying to have operating all the time. That has been something that's been particularly challenging for us in recent months coming out of the summer. We have had a lot of issues with a certain miner model that's led to underperformance. That means that's manifested in a number of different ways. We have frequent component failures, very high sensitivity to heat, and higher than normal volume of repairs. There's always going to be a amount of repair work going on at a mining facility. You have these tens of thousands of machines. They're run full speed all the time. There's always maintenance that's going on, and we handle a lot of that offsite, and we've had to bring in third-party partners to help us as well, particularly because of this problem. We've kind of just gotten to a position of just a backlog of repairs because of once again this one model that's really underperforming for us. So there are a number of initiatives that we have underway at RIOT really to aggressively focus on this. The biggest one is what you alluded to, Bryce, is simply replacing these problematic miners. We tried our best, but there is a better avenue to addressing this that also increases our hash rate capacity and improves our efficiency at the same time. And that's the course that we've decided to take. So we're purchasing these new miners. We're going to be replacing the problematic ones. We are going to be able to sell these problematic miners on the secondary market. Thankfully, the Bitcoin market has taken off recently. There's a lot of demand for this. So we're pretty optimistic that we're going to be able to unload these at or even higher than the carrying value we have for these miners on our books. So not expecting anything significant from an accounting perspective there. But we'll be bringing in more efficient machines, latest generation equipment that will help maintain a low cost of production, and it's going to be a lot more resilient in the heat. We've been testing the M60S miner is obviously very new, but we've been testing the M50S miner for a while now. It's proven to be incredibly resilient. When you think about, there's been articles lately talking about mining going on in Africa. So when you have, Bitcoin miners that have operations 15 hours, away from civilization, and they have very harsh climates in Africa. I talk about Texas, Africa is a whole nother ball game. You see those miners choosing MicroBT. So we have the benefit of a power strategy operating in a market like Texas, but it means we got to battle the heat as well. So I'm very excited about this. This order is going to replacing these machines is going to go a long way to significantly improving our production efficiency and our operating uptime, as well as a bunch of other projects we have underway to focus on that as well.
Just to add to that, Jason, because you talked about, you've been very honest with your updates for all the way since I've been in this space, and you always put in your full hash rate on there. Yeah. We've seen most of the miners now move to include what they call an operational hash rate, which actually stipulates how much actually they're actually operating in the month. Is that something you could consider putting on your update going forward, maybe? Because it will then obviously, prove that, with what you're operating with, the Bitcoin production itself is more realistic. What we're seeing is a big gulf between those that do and those that don't. And the number of miners that are putting in the operational hash rate is growing monthly. Even CleanSpark this month, they've never usually put in operational. They did this month. Marathon have done it for the last few months. So You're one of the last ones now. I think you and Argo, there's not many other miners that do that. And if you look at the tables, who's at the bottom of the tables? It's Marathon, it's Argo, it's yourselves, because you're being sort of like too honest in saying this is our total hash rate. And, you know yourself, your mining chief mining officer will know what your operational hash rate is for that month, because you've got that that software available to see that. Is that something you could even consider, or are you just happy to keep it as a total and let everyone else work out what your operation one is themselves? But
it's something we are considering. Two thoughts on that. First, going back to the accountability, we want to be held accountable to the higher standard. If that means that our production efficiency looks worse, then hey, that's something that's on us to focus on, improve on, which we are. Not closed off to including that number. However, Anthony, I know you and I have chatted a little bit about this. By definition, operating hash rate is producing, and really everyone's efficiency would trend to be pretty much exactly the same, kind of based on that. So I don't want to necessarily make it easier on ourselves by saying, okay, this was the number, and our efficiency was okay was good for this number because it was producing. I guess my view is you can infer that based on what our production is, but maybe it's just a good idea for us to include that as well. Despite I think generally that's not harmful information. So I think the point you're probably making is the more information investors have, the better. So that's something that we're definitely open to. So leave it to us to work on.
And actually, in the last week, I've had two discussions with two relevant chief mining officers from some of the big mining companies and got their views on it. And it was quite interesting. They were both supportive of having the operational hash rate as well.
Okay.
But that's only speaking to two. But they were two of the sort of the chief mining officers that everyone would go to in the first instance. So they are sort of renowned chief mining officers in the space. So going on, talking again about the energy strategy, which I mean, let's be honest, it was a great calendar year to bring in that $72 million in power sales and demand response credits. But when you sort of look at production, and I think you probably alluded to it in the previous answer. If you've got this sort of this PPA agreement for 345 megawatts in place, is there an issue? Can you just use that 24/7, or are there restrictions on that? I know you're part of the ERCOT, their policy there where you curtail short amounts.
Mm-hmm.
But if you had this PPA in place, I mean, surely most of the time you could keep that running and sort of not having to curtail for the credits as opposed to getting the production. I think that's what people are saying is
sure.
They're sort of surmising that because your productions are low, you're just switching off and hoping that the credits come in higher than the production. When they look back and say, well, if you just mined, you'd have got more Bitcoin production. I think that's the question that they're trying to ask. But you probably, from your perspective, you'll know the exact answer because you're there at the coalface.
Yeah. Let's talk about power strategy. So as you noted, we have 345 megawatts of fixed price power that runs through. It's comprised of various blocks and different prices, but that runs through 2027. Mainly, though, through 2030. So long-term, 24/7. There are no obligations under this. There's collateral requirements, which is why the balance sheet strength is important for RIOT. But aside from that, we have total control of how we want to use this power, whether we want to use it, whether we want to manually curtail and benefit from the market price, or if we want to participate in ancillaries, etc. So the focus of our power strategy is we curtail when it is more profitable to do so than mine Bitcoin. So for us, the decision is always accretive. If you encourage anyone to look at the investor deck, we put out decks at least once a quarter, usually more frequently. But a great example that demonstrates this is slide 18 in our deck. You can see in orange on this slide, we have what Bitcoin mining revenue is on $1 per megawatt hour basis. That's a number that we track, based on our mining hardware, based on the difficulty, based on the price of Bitcoin, transaction fees, all of this stuff. This is what you're making from Bitcoin mining on $1 per megawatt hour basis. And in our strategy, what we are doing is looking at, hey, is power right now at a price above that? If so, then, there's kind of two folders. And one, if so, it's going to make sense to curtail and take that benefit. So we're making more money than we would be if we were mining Bitcoin. And to the extent we have power running over our 345 megawatt block, we want to curtail when we're above that break-even price as well. So that manual curtailment is a big thing. So when it's always a voluntary decision. When we see the market price sustaining above that price, we're saying it is the best financial decision to sell power than to use it to mine Bitcoin. The other thing we participate in is something called ancillary services. And also on slide 17 in our deck, we kind of break down the components of the strategy pretty well here. Ancillary services, the easiest way to think about it is that's us selling the grid insurance on reaching stability. So we tell ERCOT, hey, these hours of the day, and we make this decision every day, there's no requirement. We say, hey, ERCOT, we will let you control this volume of power under these hours of the day if you give us this price. We are competing against all these other players in the space. We're very small. It's, billions of dollars are in this. We're very small, competing with batteries and gas peaker plants and maybe other types of flexible loads as well. And we're saying you can control us at this price. So that's a really good program because we can get paid even if we do not curtail. So that's really cool. And then if we are called upon curtail and the market price of power is high, then we're also benefiting from the difference between the spot price of power and our hedge at that time. So those are the two key kind of components there. Now, going back to the question of would it be better to mine Bitcoin or curtail? So I think the main problem that's been impacting our production has just been these operational challenges that we just discussed. In the summer months, yes, there's a lot of curtailment because there's volatility in the power market, and we're putting up those big numbers then. But that's really focused in Q3. There's sometimes these events in winter that we take advantage of. When the grid needs extra capacity to stabilize, but generally it's happened during the summer months. So the recent problems we've been having have been operational focused and not as a result of being forced to curtail. If you look at those 72 million in power credits over 2023, the power credits that we earned from our self-mining operations in 2023, the equivalent to that is about 2,500 Bitcoin. So that's more Bitcoin than we would have made if we had just been mining and using that block. To kind of wrap this up and kind of put this power strategy in perspective, we are in Load Zone South. Our Rockdale facilities are Load Zone South in ERCOT. In 2023, the cost of power if you were buying at spot with adders was $53 a megawatt hour. If you curtailed above $150 a megawatt hour, then which we'll say was the average break-even price for mining. I don't know if exactly that's what it was, but let's just say that. If you curtailed whenever the price of power was above 150 megawatt hours, you would have achieved a power price of $32 a megawatt hour. RIOT, as a result of everything else that we did, resulted in $22 a megawatt hour or 2.2 cents. So we beat the market average of curtailing above break-even by 50%. That's a result that we're pretty proud of.
Yeah, no, I get that, and actually this leads on to the next question. I mean, I did some quick analysis. Because you brought out a yearly numbers, I looked at the previous update and then subtracted the Q4 to get a 3-month position there, and I think your gross margins were like 80%, taking into account the amount of energy credits that support your self-mining business, and that was about 65.5%. And then I looked at the operating costs, so this is like your G&A costs, and also applied that same percentage. So I was doing it fairly because as an accountant in businesses, you would apply cost to each of the businesses based on a metric, and you've come up determined that 65.5 is your self-mining, and the engineering and the hosting business gets the balance of that figure there. And I was getting, your cost to mine a Bitcoin from a cash perspective, so I ignore the non-cash costs, of about just over 13,000 per Bitcoin in that last quarter. Now, we've already done analysis and done podcasts on CleanSpark, Hive Digital, and IREN. And CleanSpark were coming out around about 20,000, Hive about 26, 27, and IREN about the same amount. So you're actually producing a Bitcoin twice as cheaply as some of these other big players in the business. And you've just alluded to the fact the reason for that is that energy price is when you're putting all these strategies into place, 2.2 cents. I mean, I'm always we know Cypher's got a great deal at 2.7. That's blowing Cypher's deal out of the way, and we know that there are a number of other miners. So your neighbor in Rockdale, Bitdeer, also have a similar strategy in place. They have some a fixed PPA, and they use market price conditions as well, but they don't disclose in their monthly updates like you guys do. So we have to wait for their updates to come out quarterly. But that leads me on to the fact that, you know, your self-mining business is extremely profitable compared to all the other miners. No one can reach you. I mean, if we go back to the previous quarter, you were mining Bitcoin from a cash perspective under $2,000 because of the massive energy credits you received in those really hot months. You know, and so when we look at the hosting business, it's like chalk and cheese. It's like, you know, I looked at the hosting business, and, you know, for the $27 million of revenue received for the year in hosting, you had 97 million of direct costs associated. And that's sort of like, for me, from the whole report, that was like the standout figure for me as to, you know, how's that figure so high compared to the self-mining business, which is massively more bigger than the hosting business. Their direct costs, which predominantly are energy costs, are 96 million. So there's actually more in direct costs associated with effectively what I say is a smaller business. Can you sort of like give us an understanding of how that's what's including that 97 and how that's calculated, so that, you know, we understand it's totally separated out from the self-mining and not sort of like, you know, I know I've worked in industry before where we do like transfer pricing and things like that to make the figures look better, usually from country to country, but this is all in the same plant, so it's not like it's you know, it's real transfer pricing. But, you know, is there any sort of like, can you shed any light on why that figure is as high as it was?
Yeah, absolutely. So, you know, first going back to start with the self-mining efficiency, that is something that the value opportunity for us is to scale that up as wide as possible. So as we address the production challenges we have kind of on an interim basis, immediate basis here at Rockdale, and then we scale up Corsicana to be, you know, bigger than Rockdale, being able to demonstrate and execute on that strategy at a bigger and bigger scale, we think that's where the real value proposition of owning a Bitcoin miner comes in. And that energy is the kind of the variable cost of production. So when you talk about our hosting business line, a few points to go into. So we're talking about the consolidated financials. When you look at our RIOT and the other vertically integrated peers in the space, they describe the direct cost for Bitcoin mining as power costs and non-energy utilities, et cetera. So essentially, most of our vertically integrated peers have the variable cost for mining Bitcoin as their direct cost for self-mining. RIOT, very similar to following that practice. It's mainly, you know, our energy cost, and then we have some other expenses in there as well. For our hosting business, that is once again primarily power, and we have had legacy hosting agreements, and in those hosting agreements, we provide a pretty large volume of power for hosting customers. So our direct cost for hosting is primarily the power that's being delivered to them, but it also includes a good chunk of payroll expenses, insurance, and various service fees that we believe are tied to managing and operating the site to make it suitable for hosting clients. Now, RIOT's unique for this because we're of the most of the peers that we talked about, we're really one of the few that has a large-scale hosting business to it as well. Given our corporate organization and the fact that we've historically had a large volume of hosting, we've taken those expenses that I've talked about, payroll, a good chunk of payroll, insurance, et cetera, and that is under direct cost for hosting. A lot of our peers will probably lump those costs, so these payroll expenses, and if you look at the footnotes, you'll see the payroll expenses, insurance, other types of service fees, they include that as their SG&A or in a line somewhere around SG&A. So it's really just, there's not a standard for how all miners are reporting these costs right now. If we didn't have a hosting business, we'd probably just put all of that into SG&A as well. But that's what it looks like, right now. So the hosting business obviously has not performed well. We have had 2 remaining customers at our facility. These are customers from legacy agreements from when RIOT acquired Whinstone US in May of 2021. We are very focused on addressing this issue, of course, in 2023, we terminated these 2 legacy hosting agreements towards the end of the year because of their failure to perform under the agreement. That's a big cause of that financial strain that you're seeing there on that hosting segment. So as a result of the termination of these agreements, we expect the level of hosting activity is going to be reduced in 2024. Now, we are in litigation with both of these customers, so of course my ability to comment on this is very limited, including the details of the agreement. But I can tell you that how this litigation proceeds will influence the level of hosting that we have going forward. And I can tell you our management team is extremely devoted and focused to protecting shareholder value here. And this is really how this is going, is driving how we think about that legacy hosting business going forward. So I know I kind of gave you a lot there, but I wanted to address the hosting revenue side because you're asking about the cost side as well. But any questions or anything that I could help with and clarifying there?
Yeah, I mean, it's so you're saying that in the G&A in sort of like in the other operating costs, are they also in your report they all associated with the self-mining then is and you've actually took out the element of hosting and include it as a direct cost, or are you saying that some of the other costs are split as well between self-hosting and engineering?
No. So what I'm saying is that for Bitcoin mining, our direct costs, like the other peers, is just primarily energy, and then we have expenses that are both in the hosting cost of revenues, and we have expenses in the SG&A as well. So the SG&A includes expenses that we incur relative to running this whole business, relative to running the engineering, relative to running the hosting business, and then the direct cost of revenues for hosting is primarily power delivered to those hosting customers, but then also has some on-the-ground expenses that required to making a operation suitable for having hosting customers as well.
Great, Jason. Yeah, I know we've talked about the hosting side of the business before. We've given some commentary, but I appreciate you doing a little bit deeper dive there and talking about that production efficiency in relation to that recent earnings report. Now, we just talked about replacing some of those underperforming units, so I don't think we need to go into that one again, Anthony, but maybe I'll pass it over to you to talk about the exciting build out at Corsicana there.
Yeah, I mean, I was looking at your slide deck for your recent presentation, and actually the picture of Corsicana now, you can see it really coming to life now because we're waiting for more and more of those pictures. So can you give us an update on how phase 1 build at Corsicana is going? Because I know that we've got sort of like timelines of, by the end of Q1 things will start happening, and also give those retail investors that are going to be listening to this podcast an understanding of where you're going to be in terms of hash rate and efficiency by the end of June this year, by the end of the year, and then by the end of 2025. We know you've got some big targets in place, but are we on track to meet those targets as we speak today?
Yeah, okay. So Corsicana, obviously very exciting for us. This has been a focus for a while. This is an opportunity presented where we're able to acquire a site right next to a 5 gigawatt switch where we could get a 1 gigawatt interconnect approved. There probably never will be that again in Bitcoin. I'm not aware of a 1 gigawatt site. I don't think those type of interconnects will be given out again in the future, but it's incredibly valuable to us because instead of having to do a bunch of acquisitions, build a bunch of small sites all over the place, we have one place that we can now be putting this growth in. Now, the land was imperfect when we bought it. It's not a flat piece of dirt ready to throw buildings on. So there's been an incredible amount of work done over the past, 12, 18 months to get to where we are today. Moving all that dirt to do the groundwork to be prepared to build buildings from there, having all the components for the substation come in and building in our substation that connects to that switch. This is the foundational work that makes growth at this site possible. So that stuff is really the hardest part, building the buildings and putting the tanks and the miners in after that. I'm not gonna say that's easy, but that doesn't have the 80-week lead times, 100-week lead times that some of these high voltage transformers do. But now that we have this organic growth pipeline that kicks in here starting this year. So where we're at today is we have about 220 people, that's employees and contractors, that are on site at Corsicana, working 24 hours a day, 7 days a week, getting this thing up and running. People understand the urgency. They understand what we're doing here in Bitcoin mining. It is full steam ahead. We expect that substation to be energized at the end of this month. After that substation is energized, in parallel with all the work going on right now, we have the first building, the infrastructure, the structure's up. The immersion tanks are being deployed in there. We're going to start putting miners in the tanks. So we're doing work ahead of having this energization ready. Once the energization happens at the substation, then very shortly thereafter, then we just start energizing system by system, bringing miners online, and that's in the first building at Corsicana, building A1. The plans are that after A1 is complete, then A2 comes on after that, and then B1 and B2. We're already working on A2 as well, laying the underground pipes and the conduit and all of that. So as we get closer to this energization, I think we're going to be able to share more about what our kind of schedule is for the rest of the year, because I know that's important. I know investors want that information, so we want to add clarity around that. But as a result of this phase one, 400 megawatts of Corsicana coming online this year, we're adding 16 exahash at Corsicana. And I think we show this pretty well on our deck on slide 12. You see, we've talked about the Rockdale expansion going on right now. That's happening over Q2 and then be completed in start of Q3. But Corsicana is adding 16 exahash in, it's basically 9 months. You know, hash rate starts coming online, and then there's 9 months remaining in the year. That's pretty substantial. And then the work continues beyond that, going into 2025, reaching, so at the end of 2024, as a result of that growth and the other things that we have going on, we're expecting to get over 30 exahash, get to 31.5 exahash in total capacity. And when you think about that number also in context of the operational challenges that we're having right now, that's really like almost a tripling of our productive hash rate during the year. That's huge for a miner like RIOT that's already, you know, a pretty large miner. This growth continues on into 2025 with the first two buildings. The next two buildings beyond that, the fifth and sixth buildings, that would take us to 40.8 exahash, so just over 40 exahash when completed. This is huge, and this is a result of the groundwork that we've done over the last 2 years. The groundwork that we've done over the last 2 years has now given us this growth pipeline that we can continuously and consistently expand over the next few years, not having to find other the opportunities we're working on now or for years, you know, way into the future. But for the next few years, this foreseeable future, the pipeline is set with Corsicana. We're incredibly proud of this, and we're incredibly excited about the results coming online this year.
Brilliant, Jason. That's great news. Just to touch on you said there about what percentage of immersion cooling will be at Corsicana? Is it going to be fully immersion cooled there?
Corsicana is 100% immersion. So this first phase is adding 400 megawatts of all immersion cooling miners. So we already have, I believe, you know, when we built Rockdale, we put 200 megawatts of immersion in there. At that time, that was the largest known deployment. And now we're adding another 400 megawatts. So RIOT will have 600 after this first phase, RIOT will have 600 megawatts of immersion cooling infrastructure under its operations.
And is this similar to what you've got at your Rockdale site at the moment, or a different immersion system at Corsicana? And I asked you, question. I've asked all the miners who've got immersion cooling, but nothing's ever really come out about, you know, performance of immersion cooling. We've read all the theories about it, and sort of like, you know, we know that we get little snippets from CleanSpark. They've got a small amount of immersion cooling, and they're saying, you know, but nothing's really substantial come out. And yet this is like 2 years now in the sort of like the making. We've got the Helios site, we've got Rockdale facility, we've got other miners using immersion cooling. Are you sort of like, you're really comfortable going, you know, 100% immersion cooling into Corsicana? I mean, based on the fact that you had buildings F and G out of action, not through immersion problems, but obviously through a weather condition, and you haven't had maybe as much statistics to work through over that period. What sort of like kept your faith in going down that route?
Well, as Bitcoin mining operators, we know that running these machines at cooler and stable temperatures reduces downtime, so improves uptime, and improves the useful life of machines. Now, for the reasons you noted, there's not enough of a track record for us to definitively say, hey, look at what happened at these machines over the past 5 years. Bitcoin mining is just still too young. But as operators, we know this how Bitcoin mining works. So as we have more years under our belt, we can then definitively point to this and be like, look, you see these machines are lasting longer because of this. Particularly in Texas in this hot climate, once again, we're able to drive this low cost of production by operating in this environment, but it has its heat challenges as well. So we believe using immersion cooling helps maximize our opportunity for uptime as well. And it's also kind of indirectly part of the power strategy, because we need to, when we talk about ancillary services, you are required to operate when you bid into that. You can't say like, okay, you can turn me off, but hey, I'm just turning off anyways because it's too hot. You have to continue to operate. It's kind of counterintuitive. So by ensuring that we have more uptime by using immersion cooling, we're able to do stuff with this power strategy as well. Now, going to the first part of your question about the type of immersion technology. At RIOT, the theme of our development is we learn something every time. We build the building, we see what works and what didn't, and we improve upon that. So we used, F&G used one immersion cooling solution, and we learned from that, and that manufacturer made an improved model for Corsicana for buildings A1 and A2, the first 200 megawatts. So we're utilizing that. We've been testing that, and we're very pleased with the results that we've seen. So we're really excited to see that in action. For buildings B1 and B2, we are using another supplier of immersion equipment. So we're diversified a little bit here, and we're also very excited about seeing that equipment in action. So the short answer to the first part of your question, Anthony, was it's in a new design, it's an improved design. We're all learning together in this industry, and we think we're going to have something very special to showcase here when it's completed.
Certainly sounds that way, Jason. Thank you.
Yeah, it really is the cutting edge, both on scale and technology there, Jason. I know we've talked about Corsicana, all the excitement, and now seeing it all come to fruition, it's just mind-boggling to hear some of the numbers that you're rattling off. Now, speaking of large numbers, market cap, specifically in the Bitcoin mining space, we're starting to see a lot of large numbers there. RIOT was larger market cap than Marathon, significantly higher than CleanSpark about 3 or 4 months ago, and we've really seen some jockeying kind of for those top positions in what we'll call the top tier or tier one mining companies right now. How are you feeling? I know we've talked about some of the challenges, some of the new opportunities coming online. How are you feeling about your company when you compare it or look compared to some of the other top tier miners?
So I know I use the word Corsicana a lot, but I have to use it as part of this question. For the past 2 years, we talked about this is what we've been working on. This is a low friction growth opportunity for us. So I think what we're seeing is we did not grow our hash rate much in 2023 because we were working on this. These other peers have made significant growth in 2023, and they deserve to be recognized and get complimented for what they've done. These other miners have made significant growth over 2023. So RIOT, however, what we've been working on starts now. The results for that, start now as this new facility comes online. So I think if you look at 2023, 2024 as a growth cycle, and of course, I'm just arbitrarily picking years and combining them here, but if you think about that as a growth cycle for, these bigger miners, for us, it's very back-end loaded. Getting this 19 exahash of growth, when you include Rockdale as well, in the end of 2024, as opposed to, kind of having that smooth out over the rest of 2023. We think that by executing on this and by improving our production efficiency, we talked about tripling the hash rate, but I think we're in a position to really exit this year mining more Bitcoin per day than we are right now, and that is despite the halving. That's the challenge that we have in miners. We're always trying to scale and beat this the supply schedule that's being reduced around us. I think the market is discounting the scale of this growth right now. If you look at for example, our EV EBITDA multiple for 2025, I think the market is discounting the scale of the growth that we have at Corsicana. And I believe that when we demonstrate the results from executing these plans, we have the opportunity for our stock price to re-rate as a result. The groundwork that we've done over the last 2 years has given us a growth pipeline, to continuously expand over the coming years from here. And I think that's incredibly valuable. No other big player in this space has this type of predictability and sourcing on the cost of miners where they're going to be able to procure them and get them plugged in over the coming years.
Nice. It's a good point. It's a good point. Going back to this sort of market capitalization within the mining space at the moment, what we're sort of seeing now is we're sort of seeing a larger gap forming between the sort of the bigger players in the industry and the players at the other end, the smaller miners who probably haven't got that capital in place like you've benefited from over the last few years. Where do you sort of see North American mining in the next sort of 1 to 2 years? Are you sort of are you seeing anything that's different from previous halvings? And what do you see in the mining space for the is this gulf going to get bigger, or do you see the Bitcoin price helping some of the smaller miners? What's your view on the situation?
So I think the market recognizes and favors large-scale miners. I think that's pretty clear when you look at the trading multiples across the space, that's what's going on. And I think that trend, that separation will grow over the next few years as large miners like Riot continue to acquire large sources of power and have competitive machine pricing. What we're able to accomplish at scale as a purchaser of Hashrate, it's a lot more difficult for the smaller miners to compete. And then our access to capital is, greater and greater than the smaller miners, which allows us to grow faster and faster. So I think we're talking about the public company miners, just to clarify. I think that's what's going to happen. So in the next few years, because of their size and what they're able to accomplish, I think large Bitcoin miners are going to become more intimately tied with power generation and power developers. I think all Bitcoin mining is, not just large ones, but large ones have a great opportunity to do that at a bigger scale. All that being said, there's always going to be a place for home mining. There's always going to be a place for these uniquely distributed projects. So Bitcoin is valuable because anyone can access it, anyone can mine, anyone can use it. So that is never going to change. There's always going to be people at small or medium scale that they're able to find good sources of power and be mining Bitcoin. In the public company space, I think the advantage of the bigger miners is going to continue to take off. And, many years down the road here, we're not going to have 20 publicly traded miners. There's just going to be a handful of kind of those, pillar names in the space.
Yeah. And with the obviously the growth that you've talked about, obviously that needs to be paid for in some way and form. And you've utilized, the various the market offerings that you've used over the last few years very well to get to where you are. You've now got another 750 million offering in place now, and sort of just to give those sort of retail investors an understanding, how much more does that cover, that current ATM now that's in place? Where does that get you to before you have to sort of look for more capital? Or have you got sufficient now to get to the growth that you've articulated in this podcast itself?
So our we talked about the low production costs that Riot has on a direct basis with energy. So our objective is to scale that advantage up to as large as possible. So we've utilized at the market offerings to raise capital to increase that scale. We don't believe we are at sufficient scale yet to fully demonstrate that advantage over for a publicly traded company. So slide 15 in our deck, we kind of have a breakdown of our growth plans for the year. When we talk about our growth target of reaching just over 40 exahash by the end of 2025, this is already fully funded with our current liquidity, and then obviously we have a projected increase in liquidity from production as well. So we are already, I was on CNBC the other day, they asked me, hey, your growth plans, for this year, how is the Bitcoin price going to impact them? It's not. we're doing this, okay? Like, we have a long-term vision, and Riot's been successful because we've continued to grow. It's a great market right now. This is definitely the time for growth, but when it was more constrained, we were making the tough decisions to put ourselves in this position today to have the organic growth pipeline. So when you think about this new ATM, it's really for the growth beyond that. The work doesn't end after 600 megawatts at Corsicana, where we get to 40 exahash. The work doesn't even end after Corsicana is fully completed at 1 gigawatt. We have something very valuable with MicroBT. We have a purchase option to add 75 exahash, which would take us to over 100 exahash. And these purchase options cap our cost of hash rate at $16.50 per terahash. That's the cap. If for some reason the price is lower, then we can benefit from that. But that's the cap. So what we're thinking about here at Riot is executing that and 100 exahash. That is our goal. We laid out our press release back in December. We have the pathway to 100 exahash. So now we're thinking Corsicana is a foregone conclusion that we're moving forward with this. Although we haven't fully fleshed out our phase 2 plans yet. This is the pipeline everyone can see. We're working on our plans beyond this now because we want to have the most efficient fleet, and we want to have the largest, and we want to be the first to 100 exahash.
Yeah, Jason, that path to 100 exahash is super exciting. And as you alluded to, we're seeing so many developments in this space. So a final question from our side, as we talk about plans out past Corsicana, are we going to start to see a shift in maybe how and where you guys are sourcing power in terms of sustainability? And are we going to see you venture outside of Texas or the United States overall? I know you mentioned Africa a little bit earlier in the conversation as well.
Okay, yeah. So on the sustainability part first, we believe we're really a part of this in ERCOT already. ERCOT has a huge amount of wind and solar in its generation mix. On top of what's already there, there's 70 gigawatts of solar in the generation interconnect queue for ERCOT. That's pretty significant in the next 2 years. And that means that to the extent that's driving down cost in certain hours of the day and increasing volatility in others, Riot is going to continue to benefit from that. We, like large-scale Bitcoin miners or any Bitcoin miners really, are the buyers of surplus power at off-peak times. That can be at night when the wind is generating. It can even be in the day when solar is generating and there's no buyers. So this is, we're part of the grid, though. We don't rely entirely on renewable generation. If we were behind the meter with renewable generation, we wouldn't be able to mine Bitcoin all the hours of the day. We'd have to have a grid connection as well. So we think with what's going on in Texas, we are a part of benefiting from cheaper generation sources coming in. And we believe we are a part of helping capture surplus power and help reduce volatility in that market, which provides a grid service. As far as the growth plans go, we have really had a natural pipeline of growth present itself in Texas because of the assets that we've acquired and because of our demonstrated capabilities. Now, we don't have any concrete plans to grow outside of Texas, but we're certainly open to it. We look at opportunities all over the country all the time. So we're not like Texas only. This has just been proven to be the best area for us to grow, the easiest area for us to grow right now. But when we look at a lot of the opportunities, we have a lot of discipline. Our requirements for what's going to make sense are pretty strict because we don't have to take on a high cost site just for the sake of getting additional capacity. We already have this large organic growth pipeline with Corsicana, and we're located in ERCOT, where we've demonstrated this best-in-class cost of production. So to the extent we find other opportunities at good prices in good power markets, where we can get a very low cost, that's very key to us. I think you could certainly see us expand outside of Texas.
Amazing. We've covered a lot of ground today from both of you guys. I appreciate the time. We'll kick it back to you, Jason, for any closing thoughts, but a lot of eye-opening discussion here today and really valuable.
Thank you. Yeah. Maybe a few thoughts I'll end with. I think we're seeing the benefits of being vertically integrated. I think that's being noticed by others in the industry, and I think they are pivoting to keep up with the strategy now. I think we are very well positioned going into the halving here, both because of the low cost that we've talked about and because of our very low efficient, high, depending on how you talk about efficiency, low efficiency, high efficiency, low joules per terahash average across our fleet. We have a very efficient fleet, and we have a good amount of liquidity to fund our growth here. We have a long-term view on Bitcoin. That's something that I want to end with emphasizing, closing to everyone. And we have the ability to withstand short-term volatility as a result of that. We've been adding some more Bitcoin onto our balance sheet recently, and it's for that reason. And we're going to continue to grow, and we're going to continue to focus on our objective at mining Bitcoin at a price significantly below the spot market, and demonstrate the leverage and the power that Bitcoin miners have.
Anthony, anything to add in there?
No, I think we've had a good session today. We've put Jason to the test, and he's come back with the answers that people want to hear, and we'll make sure that the presentation slides are incorporated into his podcast, so people get to see, as he's discussing those issues, they can see the numbers marrying up to that. So yeah, been really good podcast, Jason. Thank you for giving the time today. I just wish we had, your enthusiasm was coming through that to me on the screen there, and I'm like trying to perk myself up. It's getting towards the end of the day in the UK now, but no, thanks for your time, Jason. Really enjoyed it.
Yeah, absolutely. I really appreciate you guys giving me the platform to talk about these things. These are all good questions out there. We're not, we want to be addressing and answering these things. So, very happy to come back again anytime soon, talk about it. And then, of course, we're going to have a lot of material and opportunities to talk about Corsicana as this comes together.
Free tomorrow, Bryce. Are you free tomorrow?
Let's do it.
I've noticed your smile growing throughout the presentation, so Anthony must be picking up the answers you're putting down there, Jason. A ton of tough questions. I was expecting you to be wearing your RIOT hard hat for the interview today, but you didn't need it. And if you can get Anthony and I out there to take a look at Corsicana, that'd be phenomenal. But you guys, thanks so much for both your time, both very important figures in the Bitcoin community. You guys, if you're still watching, hit the like button. Big help to me, the channel. It gets this to other people. If you're not subscribed, McNallie Money, hit the bell icon. You'll get the real-time updates or notifications as this stuff comes out. And let us know in the comment section, what do you think about RIOT? Are you holding shares? What do you think about this strategy moving into 2024? Jason, I know I really enjoyed the discussion today, and these answers were exactly what I wanted to hear. So thanks so much, you guys. Have a great rest of your day. We'll see you soon.
Thank you.
Thanks, Phil.